If you've been in the market for a while, you agree with me that day trading is not easy at all.
Well, everything that we do, there's an advantage and also a disadvantage. So we know it sounds as easy as buying whenever the market goes up and selling whenever the market goes down.
But what if I told you it's actually more than that?
So that's why I'm going to be sharing with you guys a trade I took on Euro GBP that didn't really go so well, and what I was able to learn from it, and hopefully you guys can also learn something too. I've already screen recorded the whole process and edited it so that this video don't be all over the place.
So as you guys can see, this was Euro GBP, and now in case you don't know about the strategy, it's simple. Whenever you see price above the moving averages, it's trying to indicate a buy, and whenever I see price below the moving averages, it's trying to indicate a sell. You can also add this with a couple things like support and resistance, as it will actually help you for that. But let me show you guys my complete ideology for this trade. Now as you can see, price is clearly above the moving averages, which means one thing, that we should take a buy in the market. And while you're seeing this green line right here is where I planned on keeping my stop loss. So because price has already gone too far, I don't want to keep my stop loss below the moving average. So I just plan on keeping my stop loss below the next candle. After this candle, the main candle, the next candle, which seems as a much more simpler way of doing things. And I want to show you guys the take profit I planned for this trade. You guys need to see this. Okay, let me pause it here. Now this is where price was, and this is exactly where I planned on keeping my take profit. This is exactly where I plan on keeping my take profit. Now why I want to keep my take profit here, because this is actually the next resistance in the market. This is the point that when price will continue to go up, and once you hit that place, it starts coming down. That's why I say you don't use moving averages alone, you also have to use it with a couple things like support and resistance. So I went ahead to place in my trades on this one. So I was just going with 0.05, as you can see, 0.05. I think I put that twice, and yeah, I had to start setting in the stop loss for the trades. I had to start setting the stop loss for the trades. Put my first stop loss, second one, put in like my second stop loss. As you guys can see, I've already placed in my stop loss in this part. Now the next thing is to place in my take profit at this part here in the market. Place my take profit at this part in the market. So I'm just going to skip through that. As you guys can see, I want you guys to look at everything that was happening here. Now I want you guys to look at this point right here. Now you can see how price flew from this point right here. Just look at everything. Like what was wrong? Let's still continue to see like what happened on here. Now at this point, price started switching this direction like crazy. I've already like checked like both support and resistance and everything. Like I didn't see anything wrong, so I was just like, okay, let me allow price. Anything that happens, let it happen. Like if price wants to hit my stop loss, no problem. I'm good with it, and every other thing, it's okay. And yeah, let's see what happened if price actually hit my stop loss or no.
A few inches later.
This point right here is very, very funny. Now mainly price just touched like the tippy top of the moving average you're seeing right here. It changed to an uptrend. That means like this is the main direction of the market, and this point right here actually represents a fake out. Now look at how price was close to my take profit. I want you guys to look at this thing. Like look at my entry right here. This is my entry, and look at my take profit. Price has already gone this much. Like, because as you can see, this was actually the all-time high of the market.
Now one thing I didn't really know at this point is that price was seriously reacting to a resistance and not knowing that this could literally lead to a change in trend. So from the next clip you see exactly everything that happened.
Now this was actually the morning time when I came to check out this trade. Now if you could remember, this was the point where price was before, but you could see that price has already hit our stop loss right here. Now if you don't know, this green line was actually our stop loss. If you clearly see, price went below the moving averages, and unfortunately I was low with my phone, to actually check when all these things are happening.
Now what I love doing whenever things like this happen, I try to find out like why did this happen and how can I prevent it from happening. Now as for this, I was not on my phone, but there's something that I could have easily done, which is place my stop loss right above my entry, at least to secure some profit. And this is exactly what is called trailing stop. Seeing your stop loss right above your entry, immediately price goes your direction. Now why I really use this form of accountability is because it helps me to improve with experience from things that have already happened. And for sure, I'll definitely recommend this to anyone who wants to strictly go on self-improvement. So if you did gain value from this video, you can go ahead and hit the like button. If you're not yet part of the family, you can also hit the red subscribe button. And with that being said, I'll see you guys in the next video.